We will have a likely recession in 2023. Elon Musk tweeted about it recently. 2023 likely will be year of highest inflation in decades. There will be a bear market for stocks and crypto. There are predictions of further potential supply chain issues. We will look at ways to help you protect your money in 2023. Before we begin, please do like and subscribe. We will look at the following ways to protect your money in 2023. Get the most out of your savings. Shop around for a new bank account. Cut costs by savings on your subscriptions. Relook at your bills. If you are American, review your 401 and optimize your taxes. Go back to using cash. Get out of debt like a disease. Instead of buying a new car, buy an old car. Stop drinking those $6 lattes. Help the poor. Get the most out of your savings. Saving money in a traditional bank account is currently not very beneficial as the average annual interest rate is very, very low. Some of the biggest banks in the United States offer particularly low interest rates. According to an estimate, customers of the 5 largest U.S. banks could have earned an additional $42 billion in the third quarter of the year if they had moved their money to other banks with higher interest rates. Some online-only accounts offer interest rates of around 4% and can be linked to an existing account for easy transfers. The best option for those willing to sacrifice some liquidity is currently inflation-adjusted I-bonds, which pay out 6.89% but must be held for at least a year. Americans can purchase up to $10,000 of these U.S. government-backed savings bonds each calendar year. Another option is certificates of deposit or treasury securities, some of which offer higher rates than top online savings accounts. However, temporarily locking up your money in these options could mean missing out on better yields if the Federal Reserve continues to raise rates. It is important to consider options for higher yield in order to protect against inflation. Even the best options may still be outpaced by inflation, but not considering these options could result in an even lower return on cash. Shop around for a new bank account. Banking has changed significantly over the last 2 decades. But many people continue to use the same primary checking and savings accounts for about 17 years on average, according to a survey by Bankrate. It is important to regularly check if you are still getting the best deal, particularly if you are paying any ATM or monthly maintenance fees. Many banks now offer these services for free, and the benefits of switching institutions may outweigh the inconvenience. Customers who typically have a low balance in their checking account may benefit from choosing accounts with an extended overdraft grace period. Those with more than $250,000 in deposits, which is the maximum amount insured by the Federal Deposit Insurance Corporation, may benefit from switching to a brokerage that can offer more insurance coverage through partnerships with multiple FDIC-regulated banks. Financial technology companies also often offer specialized features bundled with checking accounts, such as a tax write-off tracker or unlimited international transfers. Cut costs by savings on your subscriptions. It is a good idea to review your subscription fees regularly to ensure that you are not paying for services that you are not using or do not need. According to a study by C+R Research, the average American spends over $200 per month on subscription fees and underestimates this cost by approximately $130. Many people may not realize that they are still paying for subscriptions that they have forgotten about, or that the cost of their subscriptions has increased without their knowledge. By taking stock of your recurring payments and canceling any unused memberships, you can save money on your budget. It is also a good idea to track your spending using a personal finance app or other tool to help you stay aware of your monthly costs and make informed decisions about your budget. Relook at your cable and internet bills. If you have recurring bills that you cannot cancel, you may be able to negotiate a lower rate with the service provider. Cable and wireless companies may be willing to lower your bill because it is more expensive to acquire a new customer than to retain an existing one. Don't be afraid to ask for your old rate back or to match a competitor's price, and remember to ask about any retention discounts or deals being offered to new customers. You may also be able to request that certain fees be removed from your bill, such as other fees that may appear on your phone, internet, or cable bill. If your initial negotiation is not successful, try calling again on a different day as you may have more success with a different customer service representative. If you are American, review your 401. It is generally recommended that you allow your retirement plans to run on autopilot and resist the temptation to make changes when markets are down. However, it is important to review your savings rate, investment mix, and the types of tax-advantaged accounts you use at least once a year. This is especially important during times when the stock market is performing poorly, as it can be a good opportunity to rebalance your asset allocation if it has strayed from your long-term targets. The Internal Revenue Service recently increased the annual contribution limit for 401 plans to $22,500 for 2023, the largest increase ever in terms of dollars and percentage. For those 50 or older, the limit is $30,000. It is important to check in periodically to ensure that your investment choices are still aligned with your long-term retirement goals, but you should avoid checking too often based on daily market fluctuations. There are several important financial benefits that will expire on December 31st and could improve your household's financial position in 2023. One of these benefits is the ability to give gifts of up to $16,000 to an unlimited number of people without triggering estate or gift tax. This amount, known as the annual exclusion, will increase to $17,000 for 2023. There is also a special rule that allows donors to use 5 years' worth of annual exclusion gifts at once to Superfund 529 college savings plan, which allow parents, grandparents, and others to invest money to be used for a beneficiary's qualified education expenses. This works out to $80,000 per beneficiary account for 2022. Another rule allows individuals to pay anyone's qualified education expenses and medical bills without estate or gift tax consequences if they make payments directly to the school or medical provider. Donors who give away more than $16,000 to anyone must report the gifts on a federal gift tax return. Any excess amount counts towards the amount you can give during your lifetime or at death and be exempt from federal estate and gift taxes. This exemption is $12.6 million per person for 2022 and increases to $12.9 million for 2023. If you liked this content, hit the like button. Go back to using cash. Having access to available cash a very important factor for the next 12 months. Use cash while shopping. One of the main benefits of using cash is that you won't have to pay any fees for using it. We end up spending more using credit and debit cards. Using cash can also help you avoid impulse purchases because you have to physically part with your money when you make a purchase. When you use a debit or credit card, it may feel like you're not spending real money, which can lead to impulsive buy. Some credit cards offer rewards or cash back for purchases, which can be a good way to save money. However, if you carry a balance on your credit card, the interest charges may negate the benefits of any rewards. By using cash, you won't have to worry about accruing interest charges and can still save money on your purchases. Get out of debt like a disease. By paying off debt, you can reduce the amount of interest you are charged on your debts. Interest charges can add up over time and can significantly increase the overall cost of your debt. By paying off your debts, you can save money on the interest charges that would have accumulated over time. Finally, reducing debt can free up more disposable income that you can use to save or invest for the future. When you have less debt, you will have more money available to put towards your financial goals. If you have to buy a new car, buy a used one. One of the most obvious ways in which buying a used car can save you money is by paying a lower purchase price. New cars depreciate significantly in value as soon as they are driven off the lot, while used cars have already gone through this initial depreciation. As a result, you can often get a used car for significantly less than the price of a new one. Insurance premiums for used cars are typically lower than for new cars because the value of the vehicle is lower. By choosing a used car, you may be able to save money on your car insurance. If you need to finance your car purchase, you may be able to get a lower interest rate on a used car loan than on a new car loan. This is because lenders view used cars as less risky investments than new cars, which can lead to lower interest rates. Used cars are often less expensive to maintain than new cars. This is because they are less likely to have problems and may already have some of the more expensive parts replaced. Additionally, many used cars come with a warranty, which can save you money on repairs. Stop drinking those $6 lattes. Simple as it is, but saving money comes down to prioritization. If you spend daily on coffee, it adds up significantly on a monthly and annual basis. Make coffee at home and use reusable mugs. Help the poor. If you help the poor, you will gain a deeper sense of the hardships they face and the blessings in life that you have. This can help you prioritize spend for only the things that you need.